What is going on, guys? Welcome to Stock Talk with Nico Kritikos. Today, we're going to be doing some stock analysis for Trade Desk because the stock is now down over 33% after they missed on their earnings. Fortunately, they actually beat on EPS. I believe 59 cents versus 56 cents. But the problem is they missed on their revenue. And so that is why the stock is falling because this stock has been trading at a very high premium, high valuation for a while now. And so if this stock is not putting up tremendous growth numbers, then investors are not going to be happy. And that is what is happening here. So as you can see, I bought 8 shares just now, just because I feel like this is a good time to get started with the stock. Um, I think it's possible that the stock could fall more over the next couple days, let's say. And so if that happens, then I'd be happy to buy more shares. But right now, not going to buy a huge chunk just because even for me, the valuation is still pretty rich. I mean, if you look at these last couple years, the price to earnings, so it was over 400 times earnings a couple years ago. And in these last couple years, it's been pretty consistent trading at about 200 times earnings, which is insane, right? You rarely see a stock like that. But and especially when you look at the growth for this company, it's not like it's insane, right? I mean, 18% expected this year, 21% next year. So the fact that it's over 200 times earnings is just kind of ridiculous. But fortunately, the valuation is coming down now. As you can see, trailing earnings is now only about 103. And then for 2025, you're paying 43 times. And then for 2026, you're paying roughly 34 times, which are much more realistic numbers. So last couple years here, you can see they have scaled this business 10 years ago from $100 million of revenue to now over close to $2.5 billion. So last 5 years, they're averaging 29% revenue growth, which is phenomenal. Great stuff there. I love this business model. I think it's a very innovative business model, and I think they should have no problem putting up consistent growth. It's just the valuation has to be justified. Net income, as you can see, has been all over the place, but fortunately, 2024 is a pretty good year here, and hopefully they can keep that trend going in the right direction. The cash to debt ratio is phenomenal, over $1 billion of cash, $0 of debt. So that's another great thing I like about this stock. Shares outstanding pretty much flat, so we're good there. And so I don't know. I mean, I like the business model. The valuation's at a much healthier place. If the funny thing is, so if we scroll down here, you can see that the last time I traded this stock was in 2021, believe it or not. And as you can see here, August of 21, going 4 years ago now, I was selling this stock at $82, $83 a share. And so it's nice, 4 years later, I'm pretty much buying back at the same price now. And sure, I missed out on some gains the last 4 years, but big deal. I'm happy to get back into this stock because I do believe in this company. And so again, the stock has come down a lot. It's in a much healthier valuation, although I think it's possible the stock could fall a little bit more, maybe to $75, $70 a share. And so if that happens, then I'll be picking up more shares. But as of right now, who knows? Maybe this is the bottom for the stock, and maybe we'll see the stock turn around soon. But either way, I like where this company is headed. Keep in mind, this is a $40 billion company, and they're only doing $2.5 billion of revenue. They're only doing, what, 300, 400 million in bottom line income, and this is a $40 billion company. That's what's crazy here. But, as long as they have consistent growth, they have a strong moat, and all the numbers look good, then maybe it can sustain, 50 times earnings or something like that. But just the fact that it's trading at 43 times this year's earnings, that's right in the middle, kind of, right? It's not cheap, but it's not ridiculous where it's just kind of a delusional valuation. So that's where I'm like, okay, I could see starting a position here, and that's kind of the way I'm looking at this. So that is my analysis for Trade Desk. Let me know what you guys think, and I will see you in the next video.